Back in October 2022, I wanted to find out which is the best robo-advisor in Singapore. So I decided to invest my own money into them because, as we all know, past performance 100% guarantees future results. Just kidding. The reason I did this was because I wanted to better understand what makes each robo-advisor so different. What are the investment strategies, and are they actually better than investing myself? So in this video, I'll be sharing all my findings. As a bonus, I've compiled all the info that I'll be sharing into this beautiful spreadsheet, which you can download for free, link down below, yeah? Also, do join my Telegram chat group to discuss or ask any questions that you may have. Alright, let's start with the good stuff first. Here are the performances from 20 October 2022 to 28 March 2024, which is a solid 17 months worth of data. From the chart, we can see that both VWRA and SPY are the top performers during this period, with UOB AM Invest coming in at third place, while the rest of the robo-advisors gave around the same returns. So why did SPY and VWRA outperform robo-advisors? The first reason is due to the asset class allocation. While SPY and VWRA is 100% focused on equities, aka stocks, many of the robo-advisors has other asset classes. For example, in DBS DG Portfolio's global portfolio, equities only take up 72% of the portfolio, while 17% is in fixed income and the remaining 10% is in cash. Or in UOB AM Invest Build My Wealth portfolio, which has 65% in equities, 13.6% in fixed income, and 21% in cash. The reason they build the portfolios this way is to introduce stability. So if ever the market boom and crashes, the fixed income portion can help to reduce potential losses. Though, in return, when the market is going to the moon, we will also see slightly lower upside. But then, if you look carefully at the allocation, you will notice that Endowers and SKVFQ have 100% of their portfolios in equities. So then, why aren't they performing better? That's because they are also investing in assets from different regions. So if the regions that they are in perform better during that period, the portfolio would also perform better. Here, we can see that Japan, Europe, and the US were the best performers during this period, right? This coincides with VWRA holdings, where their top 3 holdings are US, Europe, and Japan. Meanwhile, Endowers has a higher allocation in Asia x Japan, which didn't perform that well, while SKVFQ has very little allocation in Japan, so it will miss out on Japan's higher returns. But another important thing to take note of is that most of it has to do with luck in timing the market. For example, if we start from October 2022, UOB AM Invest would give the highest returns. Then, if we start in February 2023, Auto Wealth would be the best performing robo-advisor. And according to another chart which I found from a blog, if we start in 2021, Endowers would give the highest returns. But no matter which periods you look at, the common theme is that simple low-cost index funds will still give higher returns as compared to robo-advisors. Then you'll be like,
Nah, see lah, the simple low-cost index funds beat every robo-advisors. It's better to invest in low-cost index funds.
Hold up. It's not so simple. That's because if you already know how to invest, or even if you don't, but you're willing to put in the work to do research, it's almost better to DIY. Plus, it's way cheaper, yeah, since buying the stock is a one-time fee versus robo-advisors which charge a recurring fee on a percentage of your portfolio. But from what I learned, there's still a whole bunch of people who either don't want to invest, maybe because they are too scared of losing money, or they don't know how to start. This is despite having all the free videos and articles out there teaching you how to invest. Also, the stats still show that even when we are going through some of the best bull runs ever, the average investor only managed to earn an annualized return of 2.9%. Or the fact that almost 50% of investors who invested their CPF money either lost money or underperformed CPF OA returns.
Hiya!
That's why if you are in this group of people, probably the best way for you to start investing is to go with robo-advisors first. That will minimize the risk of you doing stupid stuff and losing money. But for the others who know how to invest, just keep on doing your thing. You are breathtaking. And speaking of investing yourself, here's a word from today's sponsor. Quick pause. If you are someone who's always too busy to invest, or sometimes forgets to invest, or just wants to stop timing the market altogether, you'll find WeBoost regular savings plan to be helpful in letting you automate your investments. This allows you to dollar cost average into US stocks, thus making sure you are consistently investing on a regular basis while minimizing the impact of bad market timing. To enable regular savings plan, just open up the stock that you want to invest in, tap on the 3 dots on the bottom right, then tap on regular savings plan. And you can start investing with as little as $5 or 10 Singapore dollars. What's nice is that Weeboo lets you deduct the funds directly from your bank account, thereby saving you the hassle of manually transferring the money over. After that, you have the option of automatically investing every trading day all the way to every month. Right now, Weeboo is running a few promotions. For the welcome promo, if you make an initial deposit of $500 or more into your account and complete one US buy trade, you will first get 5 free NVIDIA shares worth $10 to $500 each. And for my viewers who use my exclusive link to sign up, you will also get 2 additional NVIDIA shares. Next, you can get up to $2,950 worth of NVIDIA shares by depositing $100,000, complete 10 US buy trades, and fulfill the maintain requirements, or subscribe at least $100,000 to Moneyboo and maintain the funds till the end of July 2024. Lastly, there's a new transfer in promo from which you could get up to another $10,000 worth of NVIDIA shares and 3-month commission-free trades for US stock trading. This is eligible for both new and existing users who sign up with my link in April, initiate and successfully transfer more than $5,000 worth of shares to Weeboo. With that being said, let's get back to the video. So then, assuming you want to invest with a robo-advisor, which robo-advisor should you go for? Should you go with the portfolio that gives the highest returns? Like I said, this mostly depends on luck. So if tomorrow China suddenly goes to the moon, the portfolio with a bigger China allocation would do well. So here are some things to help you decide which robo-advisor you can go for, starting with the fees. And here are the fees. Okay, it's hard to visualize this, so here's a chart to help you out. Crystal AI is super cheap as they don't charge any fee if you are investing less than $10,000. For amounts above that, they are still charging a tiny 0.3% fee. The second cheapest robo-advisor would be AutoWealth. And last but not least, Syfe would be the third cheapest robo-advisor as it charges anywhere from 0.25% to 0.65% fee. Now, of course, this is not to say that the more expensive robo-advisors are not good. That's because there's usually a good reason as to why the fees are higher. For example, while bank robo-advisors like OCBC RoboInvest, DBS DG Portfolio, and UOB AM Invest charge a higher fee, the benefit is that you get the security and financial stability of the bank, meaning it's less likely to get hacked and it won't suddenly close shop, like Smartly and Money Out. The second thing you can look at is their investing strategy. Okay, I know there's a lot of words here, but most of them can be summarized in just a few words. For AutoWealth, their strategy is simple. They believe in a passive strategy where they don't try to speculate where the market will go. Instead, they focus on diversification and balancing the portfolio between risk and returns. Then just let the market do its thing. For DBS DG Portfolio, they take on a more active approach where they will rebalance the portfolio based on their views on the market. So every quarter, the investment team will come up with insights to forecast where the market might go. And based on that, they will adjust the portfolio accordingly. Besides that, DBS has also recently came out with the new retirement portfolio, which will automatically adjust the asset allocation to fit your risk profile as you are nearing your retirement. Next, Endow's strategy revolves around the word tilt, like tilt towards emerging markets and value stocks, tilt towards size and profitability, and in the case of the core portfolio that I'm investing in, they are tilting towards characteristics to capture premiums that are undervalued in the market. Crystal AI strategy is also quite simple, where the algorithm will look out for investment signals such as volatility, correlation, trends, and outlook to manage the portfolio. For OCBC RoboInvest, I wasn't able to find info about their strategy, other than a very generic statement that their robo-advisor uses a specific program rule and investment methodology are monitored by a team of professionals. Next, StashAway uses something called the Economic Regime-Based Asset Allocation, or ERAA, which sounds very chim, yeah? But basically, it looks at macroeconomic data. They will then use that info to adjust the portfolio, thereby minimizing risk and maximizing returns. For example, if we are in an inflationary growth period, they will then shift the portfolio accordingly. Next, Syfe investment strategy is also rather straightforward. They optimize the allocation to give you the best risk to reward ratio, and they use something called a smart beta to look at a few criteria, such as growth, volatility, size, and country to improve your returns. Lastly, UOB AM Invest does things a little differently. They use something called the glide path strategy, which will take into consideration what is your investment horizon, then use it to adjust the risk level accordingly. Next, if you are looking to invest your SRS, only Endowers and Stashaway supports it. And if you are looking to invest your CPF, you can only go with Endowers. In fact, from my research, among the brokers and robo-advisors, Endowers is the best platform if you wish to invest your CPF in the S&P 500. Check out this video here to find out more. Next, some of the robo-advisors also have a complimentary client advisor, which can help to answer some of your financial queries. But obviously, don't go and ask them stuff like,
Huna can buy Esther can buy or not
Instead, they can help out with wealth management strategies and investment guidance without having conflicts of interest. Last but not least, some robo-advisors have cash management portfolios. I won't go through every one of them since they are mostly the same. But there are two special portfolios that I want to mention. If you are looking to park your money over the next few months, you can check out Stashaway Simple Guaranteed and Safe Cash Plus Guaranteed. Both of them are currently giving around 3.3% to 3.8% return, which are actually better than the fixed deposit rates itself. So do check them out, yeah? Anyway, that was a quick video on the different robo-advisors in Singapore. But which do you prefer? Comment down below and let me know. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.